Coming up on Market to Market, a slew of economic reports indicates winter's thaw could be warming up the economy. The wealth divide has some in the middle class seeking an elusive light at the end of the tunnel. And aging farmers ponder the transition to the next generation, but some growers are in no hurry to retire. Those stories and market analysis with Jamie Kawaki next.
This is the Friday, March 14 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. The long cold winter may be finally thawing in the Corn Belt and in economic news. U.S. retail sales rebounded in February, and new applications for unemployment benefits hit a 3-month low, suggesting some strength in the economy after the harsh winter weather slowed the progress reported last fall. The Commerce Department said this week retail sales rose 0.3%, lifted by receipts in most categories. And when you take out the more volatile sectors of autos, gasoline, and building supplies, retail sales rose 0.3% in February. However, U.S. producer prices fell last month, supporting the view that minimal inflation pressure could keep the lid on interest rates for quite some time. The Labor Department reported Friday its seasonally adjusted producer price index, which includes services and construction, fell 0.1% in February. Removing the volatile food and energy sectors, the core PPI declined 0.2% last month. Wall Street had its worst day in 6 weeks on Thursday and ended the week on a down note. But there was some good news for those working on Wall Street. A report this week from the New York State Comptroller's Office claims that bonuses for employees of the Big Apple's financial services industry are at their highest level since before the worldwide financial crisis sent markets reeling back in 2007. The average bonus of $164,000 for Wall Street bankers in 2013 offers a glimpse at the two contrasting tracks to fiscal recovery many Americans find themselves on. Census Bureau statistics reveal a wealth divide, as incomes for the top 5% of earners now slightly exceed pre-Great Recession levels. Meanwhile, the middle class, whose spending is a key driver of the U.S. economy, has seen its prospects erode. In recent years, the average inflation-adjusted income for the bottom 40% of households has declined 9%, leaving economic growth for many stagnant at best. A sluggish economy over the last 4.5 years has left Americans stuck in entry-level jobs with little chance of advancement.
Low pay, no benefits, and just found myself like many other Americans out here that did the right thing, that did what we were supposed to do, only to find out that the jobs that we were promising were not there.
The Congressional Budget Office, or CBO, foresees growth through 2016. But unfavorable job reports so far this year have raised doubts about predictions that 2014 could see breakout growth. So far, the prospects of an economic rebound seem to be fading, which is not good news for people looking for jobs or those hoping to advance.
I should have enough money to afford gas to drive 2 miles to work and 2 miles back.
Since 2007, household incomes have declined nearly 9% for the bottom 40% of wage earners. While a stronger economy could lead to more and better paying jobs, the nation's largest civilian employer, with 2.2 million employees, believes more and better jobs could lead to a stronger economy.
We have about 140 million customers that shop in our stores each week. And if those people are getting more opportunities and are earning higher incomes and there's a vibrant middle class, that's going to lead to more disposable income in people's wallets and pocketbooks. And, we'll get our fair share.
The agriculture sector is also seeing an erosion of the middle class. USDA's Economic Research Service projects national net farm income, a key indicator of U.S. farm well-being, will be 27% below last year's record, $130.5 billion. Following up on recent Census of Agriculture data, USDA Secretary Tom Vilsack says the agency is adjusting policies, strengthening programs, and intensifying outreach to meet the needs of small and mid-sized producers. Vilsack announced the initiatives this week at the National Farmers Union National Convention. The aim is to connect more small and mid-sized farmers with USDA resources that would allow them to boost sales and expand operations. A major component will be to make it easier for small and mid-sized farmers to qualify for loans that allow them to build or upgrade farm storage and handling facilities. It includes an increase in limits in the microloan program for smaller, non-traditional operations from $35,000 to $50,000. Since its inception last year, nearly 5,000 loans have provided $97 million in credit. The 2012 Census of Agriculture revealed something just about everyone in rural America suspected. America's farmers are getting older. According to the Agriculture Department, the average U.S. farmer is 58.3 years old, and the number of operators 75 and older grew by 6% in the most recent study. The trend isn't likely to reverse anytime soon. But ask an older grower when they plan to retire, and chances are they'll say someday, maybe, but not right now. And it's easy to understand. These folks have worked hard for decades. But hard work is no guarantee of success in a risky business like farming. Most endured significant hardship at some point, and agriculture hasn't always been this profitable. But time marches on. By some estimates, more than half of America's farmland will change hands over the next generation. And as Harvest Public Media's Grant Gerlach explains, many farmers and ranchers are well beyond typical retirement age, but some are in no hurry to quit.
The farm was first purchased by my great-grandfather. He farmed it, his son farmed it after him, then my dad, then me. I'm kind of the last guy on the chain.
Bob Hawthorne farms 2,000 acres of corn and soybeans in the Luss Hills of western Iowa. He's been doing it 60 years, and at the age of 84, he has no plans to slow down. It runs in the family. His father, Fred Hawthorne, stayed active on the farm into his 90s and lived to be 98, so Bob feels like he's still got plenty of time left to work.
I'd be bored not having anything to do. Now, I've also noticed that farmers, when they retire, buy a house in town, move into town, they die of a heart attack about the next year. Seems like farmers have to keep going, active, or they just fade away.
Hawthorne is part of a growing group of farmers. In fact, farmers over 65 years old have been the fastest growing group of farmers in the country. Working beyond retirement is a national trend. In 2012, 5% of the U.S. workforce was old enough to retire, but a quarter of all farm operators were over 65. When it comes down to it, it's just easier for farmers to work longer.
It's not quite as backbreaking a task as it used to be. Well, it isn't. It's more you use your mind rather than your back, so you can go longer.
And while the average price for 2013 is yet to be determined, farming is more lucrative now than just about any time since Bob Hawthorne came back to the farm in 1955. But in surveys of Iowa farmers, Mike Duffy has learned regardless of the money or new technology, some farmers will just never quit.
Farmers are farmers, and that's who they are, and that's who they identify themselves as, and so they don't, that's like retiring from who you are. They'll leave horizontal, and that's just, that's who farmers are.
I think what keeps older farmers going is the fear that if I don't keep going, there's nothing left for me to make me feel like I'm contributing and am a valuable person. That keeps a lot of farmers continuing, even perhaps when their bodies say we should quit this.
Psychologist Mike Roseman calls it the agrarian imperative. It's something he knows personally as a retired farmer himself. It's the kind of determination to keep farming that causes Bob Hawthorne to push back when neighbors ask about retirement.
They keep bugging me and say, "Oh, when are you going to quit?" I think I'd tell them I won't quit farming until all hell freezes over, or something like that.
But even as farmers take the long view on their careers, there may be some things they don't see coming.
We know the incidences of injuries and occupation-related illnesses is higher for agriculture than almost any other occupation. Aging farmers are losing their friends. Sometimes they're losing health, and they're more prone to depression and even in some cases suicide, from what we know from the data.
Decide if that's where they want to go. And
Access to care is a problem in many rural areas. The Nebraska Rural Response Hotline has been helping farmers and their families find counseling since the farm crisis of the 1980s. But many don't get the help they need. Studies have found the risk of suicide is 60% higher for farmers than the rest of the population. Studies also show a surprising number of farmers work late into their careers without a plan for how it will eventually end.
Over half of aging farmers don't have a will or an estate plan, and I think it reflects what you and I are discussing, and that is perhaps a denial of the fact that somebody's got to take over, and I need to have a plan for that.
The plans older farmers make have larger implications because, more often than not, they own the land they're working. That means farmers like Bob Hawthorne hold a big piece to the future of farming. Mike Duffy describes the trend in Iowa.
In the early 80s, about 10%, 12% of the land was owned by people over 75.
Now, nearly a third of Iowa farmland belongs to people over 75. But those landowners know their neighbors are watching and waiting.
Where you see tensions is in communities, people trying to bid for land and outbid each other, and going to retirement homes and going to funerals and asking widows if, offering to rent their land, and, all kinds of nonsense like that. To some extent, it's competition among businesses, but to some extent, it's very cutthroat, and it leaves bad feelings.
Bob Hawthorne does wonder what will happen to his family's farm. He knows one thing. After 4 generations, the Hawthorne family farm ends here. He has no children of his own. He never married. What will happen? It's a big question, and not one he seems ready to answer. Not just yet.
We aren't short of young people that want to farm. We're short of old people that want to move over.
When I look overhead, I see a lot of vultures circling and descending on me. They can't wait until I retire, I die, or become physically or mentally incompetent to run the farm, so they get their greedy hands on my farmland. Every farm wants to grab more land because it's not big enough. I never heard of any farm that wants to sell some land because it's got too much.
For Market to Market, I'm Grant Gerlach.
Next, the Market to Market report.
Further unrest in Ukraine is driving some sales of wheat and corn, but it is the growing concern over the world's #2 economy that's eroding soybean prices. For the week, May wheat gained 33 cents, while the nearby corn contract dipped 3 cents. Fear of economic instability in China and its canceled contracts with Brazil, plus continued weather concerns in South America, are creating a volatile soybean market. The May contract fell almost 70 cents, while nearby meal traded down $13.80 per ton. In the softs, cotton continued its upward trend as the May contract rose 92 cents per hundredweight. In the dairy market, April Class 3 milk gained $1.16, while the deferred contract was up more than 50 cents per hundredweight higher. Another bullish week in livestock as the April cattle contract was up $2. Nearby feeders gained $3.77, and the PED virus continued to pressure April lean hogs higher as it added $6.30 to last week's close, setting another all-time contract record. In the financials, the euro gained nearly 4 basis points against the dollar. Crude oil fell by $3.47 per barrel. COMEX Gold had a huge gain of $42.40 per ounce, and the Goldman Sachs Commodity Index declined almost 8 points to settle at 645.25. Here now to lend us his insight on these and other trends is one of our regular market analysts, Jamie Kawaki. Jamie, welcome back.
Thank you, Mike.
Big week again in wheat as we continue to watch this situation with the Ukraine and Russia unfold. Where is this market headed?
I still think there's a little more upside in the wheat market. But like you're saying, the support right now is coming from Ukraine, their Crimea region especially. They're only roughly about 5% planted right now, and they're about completely halted. Farmers can't get fuel, and it's pretty much a standstill over there. There's roughly 50 million bushel of wheat in that area that could be short now on the world market. So we've seen that spill over into the U.S. markets, and also we've seen in the southern wheat belt situations that look like the dirty 30s again. 30, 40 mile an hour wind, a dust bowl down south this week. And everybody was caught short, getting flushed out. The market is turning higher. I like selling the new crop December up around 730. This market's been on a big rally, $1.30 roughly from the recent lows. So I think you have to reward this rally with some sales.
But you'd let her run another 25 cents or so before starting to make some sales?
I think there is some more upside. The big upcoming date is Sunday. There's a referendum vote in Ukraine. See what happens with that. And there could be some fireworks Sunday night, which I think would be bullish for wheat. That should be laid into with some fresh sales.
Now, if come that vote and the Crimea decides to side with Russia or stay with Ukraine, whatever should happen, will that provide enough certainty for the market that we could see a sell-off? Or
I think it's short-lived myself. I think we need more than just a little bit of unrest in Ukraine right now or Crimea. But I think you should be selling to a big rally. Lots of uncertainty yet with our crop, so there's plenty of time to re-own and get long. But I think after a $1.30 rally and this news that's already in the market, it should be rewarded.
All right. Well, now let's take a look at the corn market. We saw corn rising last week on the back of the Ukraine conflict. This week, we didn't see a whole lot of movement, trading relatively sideways. Is that trend going to continue?
Short term, I think so. Wheat has been the leader. Then that spilled over into corn real lightly at times, but not much. I'm a seller here in rallies too. I like 490 December. That's a 200 daily simple moving average. And I think you get up in there, you have to make sales before the big March 31st acreage report. But same as old crop, 490 to 5. I think you have to lay some off for sure. Or sell your last batch. But yeah, corn has been a follower of wheat right now. And with the normal growing season, there's plenty of downside, I think. So I'm looking to get hedged up before the acreage report.
Now, with this recent rally in corn and until this week, the rally in soybeans, is the market expecting any significant change in the prospective planting report? Are we seeing one buying acres from the other?
Well, we've seen a rally in corn, so I think we have bought some acres. I'm right around 91.5, 92 million corn acres for the report. We could see record bean acres, 82 area, maybe more, up to 84. But yeah, we have seen some acreage being bought off this rally. The only kind of nuisance there is guys have low risk tolerance, is futures and or options is pretty much the only play. Basis levels are very wide right now, and it's not in your advantage to sell into the basis. It's more lucrative to use futures or options.
All right. Well, now let's move and look at the soybeans. This week, tough week for soybean producers after that rally we saw last week and into this week. Are we still on the downturn?
Short term, I think there is some more liquidation yet to be seen, but the bean market has been all spreads this week. Old crop versus new crop. We saw it blow out up over $2.30 difference. 190 was a 38% retracement. I think we go on down $1.76 area. That's a 50% retracement. But all this just off uncertain area with China, Brazil, and us. China's already washed out on 20 cargoes with Brazil. There's rumors they might have washed out another 20 on top of that. So a lot of uncertain area. Brazil's crop seems to be getting smaller, though, but that seems to be in the market. But a lot of spread action this week. Here as well with new crop, I think you have to sell rallies here before the end of the month. I like $11.90 to $12. Same technical area up against a 200 daily moving average. We've been teeter-tottering all week long, up one day, down below the next. But that $11.90 to $12, I think is a great area to make some early sells.
Get in there and take some cash off the table.
Yeah.
All right. Well, now let's take a look over at the livestock market. On the fat cattle side, we saw another run up this week, another $2 in fat cattle. Where is this support coming from?
It's still, demand outstripping supplies right now. It was a little bit sluggish early in the week, and we did catch a late rally here on Friday. $1.50 cash traded in Nebraska was a big stimulus. But I'm in a hedge mode here as well. But for the deferred cattle, I did some August, Octobers, Decembers up near 138 to 140 on those. I think the cash market could drop off $10 to $13 come early spring. But nearby contracts, I think, are safe right now, and I look for it to play around the 146, 148 area.
Now, do you see the cash in the in the deferreds dropping off just as demand begins to fall, as consumers react to these high prices? What makes you a little more bearish long term?
Yeah, demand. We've seen boxes, ripped just consistently, $2.5 a day, the last 2 weeks. I think we are already seeing a little bit of resistance at the counters right now off of that. And I think we'll have a little bit better supply situation too this fall. Right. But I just see boxes backing off. Don't see this demand staying up here where it should be. Weekly exports, so we're very, very good for cattle this week, the beef market, but I think that's a short-lived type trade too.
Okay. Well, now let's take a look at the feeder cattle market. Even with this rally that we've seen in the corn, we have seen feeders get stronger week over week, up another nearly $4 this week.
Yeah, very, very impressive trade there. I still like this longer term more than I do the live cattle, just based on the supply side. And I also think normal growing season, corn trends lower, back near 4 maybe, and that keeps feeders supported too. I know this is quite a bit below the market, but I like buying August where a spec played down around 173.5. It's sharply lower, but if you did see some liquidation coming into month end, I would look to get long there. But I think the feeders are fine and not doing much there right now at all.
What have we heard on herd regrowth? I mean, does it look like this herd is growing as we see $3,000 bred heifers out there? Is that enticing some folks to retain feeder cattle as breeding animals?
We are, but it's going to be slow and long. It's not, flip the switch on next spring and we're back to record herd size. We're the smallest since the 50s yet right now, and I think it's a 2 to 4 year deal. I don't think it's we're going to be fine again next summer.
All right. Well, let's take a look at the hog market. April lean hogs up another $6.30 this week. All PED related?
Mostly. Same situation here as kind of the box beef trade. We've seen the index over 34 days in a row, new highs, just consistently day after day after day. News today, it's down in Arizona now, but it's overbought. Obviously, we've been on a tear with no setback at all. It's hard to judge this market, obviously, too. I mean, 130 is a round number now. I like to call it the look left indicator. I look at a chart and see what's left. There's nothing, roll open airs, so just throw out even numbers.
And you're looking at 130 in the deferreds here over the summer months?
It could be. That's just a round number,
sure,
just because there's nothing chart-wise to go off of pretty much. But exports were very soft this week for pork. Beef was strong, pork was weak. I don't know if that's a sign of rationing has started, will be starting. I think you have to see back-to-back weeks in a row to see exports back off. But it's the same situation as the beef market. It's going to be hard to sustain this demand up in here. I know we've lost, upwards of 5 million pigs maybe, but the demand is the wild card, and I'm not buying into it. I'm waiting on a setback to see what happens here eventually.
All right, Jamie, before we let you go, we saw crude oil take a little dip this week. Where do you see that market headed?
Still $1 down, around $96 in May. We've seen a $7 setback here the last couple weeks, and look for more downside. But this is a global kind of issue right now. We've seen the stock market setback late this week. The S&P was on a 150-point rally. We had our 5-year anniversary this week of the bull run since Lehman collapsed. But this is all weakness from China spilling over our markets.
All right. Well, thank you so much, Jamie. Appreciate you being with us. That wraps up this edition of Market to Market. But you can find expanded market analysis as well as streaming video of our program free at our website. Now, we want to remind you that Market to Market may be airing in some different time slots and in some cases on different channels over the next few days due to PBS fundraising activities. We encourage you to check your local listings for details. And if you value programs like Market to Market, please consider making a pledge and investing in a service that provides you with accurate information and timely market analysis. We do appreciate your support. And until next time, thanks for watching. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.